This is a post-trade analysis of the 280 pip trade that we took on GJ last week. There was a total of 300 plus pip drop last week on GJ, and we discussed some of these opportunities in the weekly outlook video as well. We talked about waiting for price to break out of the consolidation zone on the 4 hour and lower timeframes, waiting for confirmation on lower timeframes, and then taking the trades. There was also potential for fake outs, which is exactly what happened during Monday's London session and Asian session. So in the group, we waited until Tuesday's London session and followed the same suggestions given in the Outlook. I posted the trade on my trading view here, the initial trade, which was 19 to 1 RR, going for 190 pips, a TP with a 10 pip stop loss. And so we're going to do a replay here of the entire move and see how someone who may have missed the move could have caught it, or if we see a similar setup in the future, then how can we take advantage of it again. The first trade here, 19 to 1 RR, and then after it hits TP, it continues down for additional 90 to another 100 pips or so. So in total we caught approximately 280 pips out of the 300 plus pip move that happened on GJ. We use the same levels and suggestions given in the weekly outlook last week, so there's really no change at all in how we took the trades, but we obviously analyzed the market the same way as the levels and the candles updated throughout the week. The higher time frame levels from quarterly, yearly, and monthly are the same, so we're going to start from the weekly time frame and go down. Let's start from here. So on the weekly time frame, some key levels that we see price rejecting at that time were 152 300, 152 300, and then looking at the overall resistance zone. So this is what we're waiting for price to break and clear out in order for price to continue bullish from here up top to about 190 to 200 pip trade, coming up to this resistance right here around 155 500 to about 156 level flat. So that was for the buy opportunity. For the sells, we're waiting for price to, there was consolidation that was forming here, and we'll see that as we drop down to lower time frames. But we're waiting for price to break out of the consolidation. If it does, the first target was at 152 level, 152. And then after that, if price continues back down, then it would break the weekly support, minor support that's being formed here at 151 flat. If that is broken, which it was, then there's really nothing stopping price from coming back down and tapping into this 148 500 area, going into about 148 300 flat, any of those. So again, all of these are zones. There's no clear cut level that we can say that price is going to, absolutely tap into 148 500 and then go bullish, go bearish, anything like that. These are all zones that we're looking at. So this is on the weekly time frame of what price was doing and what we're looking at going into Tuesday's London session. As we come down to the daily time frame, this is the candle that we're looking at. So while we're analyzing in the weekly outlook, this candle was actually bearish, and we're waiting for this candle to break the high of the previous one and continue bullish from there. But clearly it did break the high, but it failed to continue bullish, and actually it rejected that 153 300 area. So this is another zone that we're looking at. This is exactly where the consolidation was happening. And then once we waited for confirmation across time frames, we took the trade here. On the 4 hour time frame, this is exactly where the consolidation is forming, right into this level. And as you go down on lower time frames, you can definitely adjust these zones and kind of close in on exactly where the consolidation is happening. So that is one thing that I do that helps me out. Or else you're just going to have this huge zone that has the fake out plus the consolidation, and then you're going to be confused. So rather what I do is as I drop down to lower time frames, I just adjust my zones to kind of only look at exactly where is the consolidation happening. So in this zone here, this is exactly where the consolidation is happening, and you have a ton of fake outs here to the downside and to the upside. So this is the fake out that happened going into London session on Monday. You had fake out throughout the session, and then on a New York session on Monday, you had this huge pullback, and then throughout the day, pretty much price trying to push bullish, but failing to break above 153,300. So when price started doing that in New York session, we waited until Asian to see if we were going to get any movement. But even in Asian session, there were simply consolidations and fake outs happening. So this was all of Asian session on Monday. So we waited for London session at this point. After this consolidation on Asian, we waited for the London session, and then as we dropped down to the lower time frames, entry was taken on the 30-minute using the 15-minute time frame and the 2-hour time frame here. Again, close in on exactly the area where consolidation is happening. This is the exact area where we're looking for sell opportunities. So yes, you could mark up the zone here, but really you don't have a sell opportunity unless price breaks below this 153 area, 153 to 152,900 area, unless clearly price clears out this entire area and then continues back down. So this is the zone that we marked up, and then for buys, obviously it would be if price cleared out this area and continued bullish. Around this time is also when we got the news that investors were now starting to get some cold feet in regards to the pound strength. So there was a ton of optimism in the past couple of weeks and even months from the optimism, given that the UK was one of the leaders in the mass vaccination programs. They were vaccinating a majority of their population. The majority of their population has their first dose. They were getting ready to open up their economy. So there's a ton of optimism coming from how the UK government was responding to the coronavirus pandemic and how they were trying to get a hold onto it so that they can open up their economy, right? And so now, going into the second quarter, we had news from the UK government that there could be potential reduction of vaccine supplies. So that was the first negative fundamental that we got going into the second quarter that we are in right now. And then also there was this tension, and there still is this tension between the UK and the EU, where the EU is saying that they're not going to export out any vaccines unless they get all the supply that they have paid for from AstraZeneca, and they're able to pretty much start their mass vaccination program, speed up their rollouts, vaccinate their people, things like that. And the third thing at during this time when price was tapping into 153,300 and some higher time frame resistance levels was that the AstraZeneca vaccine trial has been stopped for the children below the age of 12. So between below the age of 16 to 12. Um, and that was obviously AstraZeneca is a UK based company, so obviously that brought in some market fear for the pound. So all those fundamentals plus more combined brought in some market fear for the investors. And as price was consolidating in these levels, as soon as that fundamental came out that the investors were getting cold feet, that's when we saw a drop in GJ, and then we saw some fundamentals to support this move down as well. So that's what we were looking at in London session, and then we waited for price to clearly break out of this, give us a retest, and then continue back down bearish for an entry. So as you can see, there's a ton of volume to the downside. Price has cleared this area out. So some people may say, why didn't you take the entry here? Because like I said, when there's in many of my videos is that whenever there's a lot of volume to the downside or to the upside, the market will always come back and try to correct it. So what I'm specifically looking for here is a correction of this move, a bullish close at least, and then the next candle to continue back down. But what I want to see is not a bullish close in the zone, but a bullish close below the zone with a top wick rejection and then a continuation back down. So it could be a bullish close actually with a top wick rejection or a bearish close with a top wick rejection, but I need to see some form of resistance being formed right below the zone and then a continuation down. So now we see a bullish close, you see a top wick rejection, price trying to continue down. This could be another opportunity that you could take, but again, my goal was not simply to take 10-15 pips and then call it a day. My goal was to turn my scalp into a swing trade, so that's why I didn't take this trade opportunity. And also, this would have been, if I took the entry here, this would have been a 15 pip stop loss, whereas for my swing trades, I usually don't go anything above 10 to 12 pips. 12 pips tends to be my max, but you'll see me with a 15 to 20 pip stop loss if I'm looking for a position trade. So there's a difference between the two. This is a swing trade opportunity that I'm looking for, so I'm not going to have my stop loss any more than 10 pips here. So what I'm going to wait for now is price to pull back, give me some resistance here, and then continuation back down. So we see price pulling back. We see some resistance being formed right below this area. You look on the 15-minute time frame. So price clearly comes right to that zone, rejects it, creates a resistance, and continues back down. So as the next candle creates a top wick rejection, that is where the entry was taken for a sell at 152.900 flat. We take profit at 151 flat and 153 for stop loss. So we can confirm that with the trading view here as well, where the entry was taken at 152.900, stop loss 153, take profit 151 flat. And that is 190 pips take profit, 10 pips stop loss, 19 to 1 RR. There we go. Now as price continues back down, we were looking at, okay, so where can price pretty much come down to, and where can we see price reacting off of certain levels? Again, all of these are zones, but this is the next level that I saw that price could potentially react off of. So this was that 152 300 mark, that where we took our first partial. So this was partial one. So here, what we see happening is every time price taps into it, there's a ton of volume that follows. So first example is right about here where price pushes bullish, comes back, retraces, taps into this area, and then you see a ton of volume to the upside. Same exact thing, price comes back, taps into this area, a ton of volume to the upside. We see the market collecting orders here, consolidating, and then pulls back right into that area and ton of volume to the upside where it finally breaks above the resistance levels that it was unable to break past previously, right into that area. So as price taps into it, and I see this happening over and over again, so once, twice, and three times, I know that this is a level that price can potentially give us some trouble at. And by that, I mean pullbacks or consolidation or anything like that. So this is where our first partial level is going to be. You have another break and retest. So for some, that could be another scaling opportunity. But on any given trade, I don't take more than 3% risk. So I only enter a trade, or any trade that I take actually, I don't risk more than 1 to 3%. And in this trade, since I did get that nice rejection and those confirmations I was looking for, I just went in with a 3% risk. Usually if I know that I'm going to go ahead and scale in or anything like that, then I just split up the 3% risk. So maybe take a 2% risk trade here and then save that 1% for a scale in, or 1% trade here, 1% scale in, and then maybe another 1% scale in. But in this case, I went in with 3% because I was not looking for a scale in opportunity. I was just waiting for price to kind of break through these levels and then continue back down. So you have another opportunity for another scale in, and then first partial hit. So this is about 80 pips or so. From entry to partial is about 60 pips, and then coming down is about 80 pips or so at the moment. Now the second partial was taken at 151.800. So let's mark that up as well. So 151.800 was partial 2. And keep in mind that this 152 level that we discussed in the Outlook video was the level from the weekly time frame. So I can actually remove these so you have a little bit of, clear view of the charts. But this was that resistance level on the weekly time frame, that 152 level. So once that's broken, then obviously price continuing down, couple of more pips, you're coming right into that weekly consolidation at that point. And by this time, in just this one daily candle, you've cleared out all the bottom wicks of the previous daily candles, where you see clearly, again, the volume dying down here. And then as fundamentals support, you had nice movement to the downside, tapping into 152 zone here, flat, tapping right into this area on the daily time frame. So tapping right into this area, and then as price continues down, this is where our partial 2 was taken. So looking at the daily time frame and the weekly time frame, we see that there was consolidation that was forming here. So that's why there was partial 2, and then we were waiting for some pullbacks, consolidation, things like that. Because if on higher time frames, if there has been a consolidation at one level, the chances are there's going to be consolidation at that level again. So we've seen consolidation, we've seen fake outs between 152 and 151 800, and so this is where we're expecting some more consolidation and pullbacks to happen. Let's drop back down to the 30-minute. So far, this is where the entry was taken in London session, going into pre New York on Tuesday, and then price continuing down. This is New York at the moment. Hit our first partial. We're waiting for some pullbacks or consolidation. So you get a nice pullback right there. Price now creating another resistance right into that area 152 300 where we took our first partial. Now it seems like, it's pushing back down, hits partial 2, and now clearly across time frames, this is a ton of volume to the downside, right? Even though you're getting retracements on lower time frames, but as you go on higher time frames, this is a ton of volume a ton of bearish volume, excuse me, to the downside. And as you go up on time frames, 4 hour, a ton of volume again, right? And then even on the daily time frame. So we know at this point there's going to be some sort of consolidation or some sort of pullback, and that's what we're waiting for. So that's why there was no scaling opportunities taken. And then as price broke past partial 1 and partial 2, we just ended up trailing our stop loss instead. So our first stop loss trail after partial 1 was right below this area where you see this resistance being formed where price failed to break above. Every time price tapped into this area and pushed bullish, this is the area that it rejected until the third time, and then finally it broke above it. So this was that 152 700 area. That was the first trailed stop loss. And then once we broke out of partial 2, broke below it, we trailed our stop loss to that partial 1 level. So coming all the way down here, waiting for price to at this point just continue back down and hit TP, which was the first zone that we were targeting was just 151 100 right into this area, and then a little bit more. So you see some pullbacks, you see some consolidation at partial 2. And at this point, you're pretty much risk-free already. You're about, let's see here, you're about 100 pips into profit already, right? So you're pretty much just playing between 90 to 100 pips in profit already, completely risk-free. Took 2 partials already, took 1% off per partial. So you only have 1% of your trade running at this point. Price consolidating here again throughout late New York session going into Asian session. Price pretty much just consolidating. You get some nice pullbacks. Now you're coming into London session on Wednesday. Still risk free. Your trail stop loss, second trail stop loss being partial 1 level. And then finally TP hit going into New York on Wednesday. Now we're waiting for still that pullback to happen on higher time frames. So at partial 2 you see consolidation and then continuation down. You're looking at the daily time frame, still a ton of volume to the downside. Once this area here is cleared out, you're clearing out this consolidation, you're clearing out this break and retest support. Now there's really nothing stopping it from coming back down into these areas here first, and then after that 148 500 to 148 300 level, which is this weekly candle wick fill right here. So as you can see, by Wednesday, we were starting to break the weekly support right here of this 150, 151 flat, right? So we're already starting to break below that. Now, obviously, we want to see some retracements of this level and then a continuation down in order for us to take advantage of any more sell opportunities. So still waiting for those confirmations, 190 pips, you're done. For right now, we're waiting for some pullbacks. And then we waited until London session on Thursday, and then we took some sell opportunities here again. So as you can see, there's consolidation, but clearly price is slowly making its way up to reject this 151 level. Here, you're in Asian session on Wednesday at the moment. So we waited until London. So you see consolidation here again, pretty much is sitting around this area. So now you have London session coming in pretty soon. Use the same exact confluence from the 15-minute and 30-minute time frame, with the initial entry being taken at 150.716. Stop loss was again 10 pips, so we'll just adjust that, and then take profit was 148.500. So this was another attempt to turn this scalp into a swing trade, but this was already Thursday session, so we looked for our scalp opportunity, which is 15, 20 pips, and then just let the rest run risk-free completely. So 10 pips for us was right about here, right below the zone here again. So same exact thing, we waited for a break and retest, and then we waited for price to continue back down. So you get a nice little break and retest here. Price continues down. We looked for our 20 pips or so. We had a ton of volume to the downside. So at this point, we had already taken partials. We took partials at this point, and we went completely break even. You were risk free at this point. Again, at this time, I actually went in with 2% risk instead of 3% because I have already closed out of a bigger position earlier in the week. So now just reducing my risk, just playing with the profits I've already made. Price continues down and completely risk-free at this point, and there was some more consolidation that was forming. So I closed out another partial of my trade at that point when price started consolidating here. So I'm risk-free still. Price trying to create some resistance, trying to come back down. So on the 30-minute that, or on the 15-minute, that looks a little messy, but if you come on to the 30-minute, you see that price is simply trying to correct this huge bearish move to the downside, right? So it comes back, creates a pullback, and then continuation back down. And then we see that price is clearly trying to consolidate on lower time frames, as you see, right? So volume dying down, and then at this point, price consolidates, and so we close out our trades. And then some people, they let some of them run. Some people just trailed the stop loss, took some more partials, anything like that. But overall, from entry coming all the way down, that was additional 70 pips, almost 80 pips down here. So some more consolidation. This was Asian session from New York session into Asian session. Some more consolidation. We just waited for London session here again the following day on Friday. And then price continuing and tapping into some lower levels and continued all the way down for another 100 pips or so. So that's how we took advantage as a group, took advantage of this 300 pip trade, where some people just managing their own trade according to their risk management, but pretty much everyone took advantage of these entries with us. Everyone took advantage of these sells with us, and we took advantage on average about 280 pips. So my personal trade was 280 pips total. Some people got 300, some people got a little bit less, but as a whole, we pretty much used the same exact analysis that was given out in the weekly outlook, same exact suggestions. We waited for confirmation, everything like that. And then towards the end of London session on Friday, we uh, closed out our trades because we knew that price had to come back at this point to pull back and correct the nice bearish moves that we've seen the entire week. So on the very up top, where price made resistance and came all the way down, was about a 350 pip drop the entire week. So a ton of volume on average, just taking advantage, waiting for our confirmations, not getting too greedy, only risking between 1 to 3%.